You might be wondering, what in the world am I talking about? Flushing your money down the drain in order to save taxes. Well, this is what happens often at the end of the year when business owners realize they have a profit and they want to get rid of that profit so they don't have to pay taxes on it. So they realize if they get rid of that profit, flush that money down the drain, they won't get taxed on it. So one of the great ideas people come up with is, let me go buy something big and expensive. Well, there's several reasons why this is a bad idea. One thing you can do is prepay expenses for next year. You could prepay your rent for 6 months. But this just pushes your problem down the road and may make next year's problem even larger than this year's problem. So let's talk about the situation. Let's say you've come to the end of the year and you've got a $75,000 profit. At 12% taxes, you're looking at about $8,000 in taxes that you're going to owe the IRS when you're done. Don't panic. But yeah, you could go out and buy a big truck, let's say, for $60,000 and try to eliminate your profit that way. But a couple of things are true. That truck's not going to make you any money, not any more than the truck you already have. And the long-term costs are going to outweigh the short-term tax savings you get from buying that truck. Now, the IRS has said if that truck is big enough and heavy enough, and use it 100% for business, that you can depreciate the entire thing for bonus depreciation the first year. The problem is most people will finance that truck, which means you don't even have the cash on hand. You're borrowing money from the bank to try to save on taxes. This means you haven't planned for your partner in business, Uncle Sam. Now, we think that balloon deductions are a much smarter choice for your business. You still get to deduct the money you put into the plan, which could be a retirement plan in this case, IRAs, SEPs, defined benefit plans, and your fund can grow while reducing taxable income. Remember, with this truck, in 5 to 10 years, rust, use, depreciation is going to make this thing worthless. With a 401k or an IRA, in 5 or 6 years, you could have doubled the value of what you put away. That same $60,000 could now be worth $100,000 and help you fund your retirement. Now you may say, well, I can't put $60,000 in an IRA. You're correct, but there are other plans to allow you to reach different levels of deduction. $7,000 for the IRA, $16,000 for the simple, $23,000 for the 401k. In addition, 401ks can pay a profit sharing portion, which could be another $60,000. Finally, one of my clients who's a professional puts over $200,000 a year in his defined benefit plan. So there's plenty of room in there for a nice big deduction that saves you taxes now and can grow toward your future retirement. There's other smart investments you can make now that can save you money as well. Real estate with accelerated depreciation. In some cases, you can buy a rental property and depreciate up to 20% of the cost of that property in the very first year. Not everyone will qualify for this. There are some special rules attached to make it work, in addition to some engineering you have to pay for. But if you can imagine buying a $500,000 house with a $100,000 down payment and writing off the entire $100,000 against your taxable income for this year, you can really accomplish some big goals that way. We want to avoid spending on things that won't bring you a return in the future. Let's think about buying things that will increase your production speed, lower your cost of providing your service, increase your profits. These things we want to be able to pay for themselves in a year or so. I'm not talking about a solar power on your roof that's going to take 10 or 15 years for you to recover the cost from. I want something that gives you a break right now. I think those are better deductions to save you taxes. But really, what we're talking about here is taxes aren't the enemy. In fact, they're well worth paying because it leaves profits behind for you to spend on the things that actually matter to you. Your goals, your dreams, your bucket list, your needs. We just want to be careful not to let these needs grow out of hand, grow too fast. So, what is your plan for the future? Is it to leave something to your kids, to support your church or community? Or is it just the thrill of building something great? Is that why you're building your business? Let's build it well and pay the taxes we need to. Now, I'm going to focus on how to reduce taxes in another video, but for this part, I want you to realize that paying some taxes is not a bad or evil thing. We just need to plan ahead for it. Set aside some of the money in our account, prepay it to the IRS. That way, it's not a surprise you owe $100,000 at the end of the year. If you have questions, please give me a holler, but let's avoid the toilet bowl for this year's tax savings programs. Thanks for listening. David O's here.